Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Monday. Happy Monday morning. Hope everyone's doing great. All right, so we have a very quiet, thankfully, very quiet economic calendar this week. I was putting that in this week's issue of This Week in the Markets. So very quiet means we don't actually have a lot of impactful earnings. We have some scattered earnings, but nothing really on high concentration weighted stock, which is great. So we don't have as many. Oh, and we're in the FOMC blackout. So no being blindsided by FOMC speakers and sound bites either. The debt crisis this debt ceiling crisis is behind us. The engrossing process, dotting all I's and crossing all T's, because changing even a comma in a bill requires an act of Congress. So that's out of the way. So we get to just trade, hopefully, just some good old-fashioned price, volume, volatility, and time. What a concept, without headlines and tweets and whatever else derailing. So I'm stoked. I'm stoked about this week. We've had a couple really good weeks, not as active on the swings as I would like, but I'm hoping that we're going to start to see much more clarity because we're seeing fund flows into things like financials. We're seeing positive fund flows into things like healthcare. And those have been some of the laggard corners of the S&P and Dow. So let's start the conversation off with probably the most important, well, not important. I don't know if it's an important question, but it's definitely the most frequently asked. And that is, Rog, what about 4,300 on the S&P? And there was two questions I got a lot of these last few days. And one of them was this one: Rog, can the S&P break 4,300? Now, minus my crystal ball, I'm going to presume, since we're knocking on the door, there's a pretty good chance that we're able to break it. But what I want to remind everybody is we need fuller participation. We need to start to see at least some flows into things like XLF, XLV, and even XLE, because the NASDAQ, frankly, doesn't care about either three of those sectors. It's very happily cranking higher on XLK, XLC, XLY, and SMH, and it really doesn't need anything else. But when we talk about participation, number one, when we're seeing the tech leading everything, realize that's pretty important. Please don't let anyone tell you that's not, because XLK, Apple, and Microsoft essentially are weighted heavily in all three of the indices, which makes tech and XLK specifically unique. Financials are not that way. Healthcare is not that way, right? So remember that tech matters, and it matters, frankly, the most. After that, when we talk about participation, again, don't let anyone tell you, well, we're not seeing as many stocks ticking up as ticking down. Who cares, right? Because most stocks don't matter. I know that sounds like heresy, but in a high concentration world, and that's the one you and I live in, it really only matters what certain stocks are doing because they are heavily weighted. So with that being said, kicking off the morning, that's what we've got to deal with. Are we going to see healthcare and financials join semiconductors and communications and consumer discretionary and general tech to see a more broad-based rally? And that's going to give the S&P and the Dow the buying demand, the buying support and momentum that they need. All right, so kicking it off with our first question of the morning. If you got any questions, gang, feel free to type them in. Mark, thank you. Got it in good and early. If you have a question, if you have just a symbol, a time frame, whatever, go ahead and type them in. First come, first serve. First up is Matt. Sure. By the way, I've got three time frames on the screen right now, gang. I've got the 5-minute for day trading, the 1 hour for short-term swing trading, and then the daily for short-term and slightly longer-term swing trading. So we're able to manage three time frames, just three. I don't make my decisions off 47 time frames, and we don't jump time frames. Well, this time it's a 1 hour, but the next time it's a 15, and the next, nope, we keep it really simple. And so depending on what my time horizon is, my time frame will be the one that I choose from these three. Unless, of course, I am looking for my longer term portfolio, that's going to be a weekly. Okay. So we're taking a look at Mattel, neutral on the daily. Thank you for the specificity. Love it, Mark. There's a new Barbie movie coming out. Oh, that's right. That is right. Who is playing Ken? I think he was, whoever the dude is, was born to play Ken. Oh my gosh. I think I've seen some trailers on the YouTube. Thoughts on a long call. Here's my thought, Mark. If my assumption is always this, if I'm thinking it, if I'm talking about it, to a certain degree, it's priced in. Um, I don't know how long it's been known the Barbie movie's coming out. I don't know if it really is a needle mover for Barbie, and then therefore for Mattel. Here's what I do know: Mattel's going to prove to us that it's going to be moving higher, and uh, if that's the case, right? If that's the case, if it's moving higher, it's got to break 19. It's got to break really 20. So let's do this on TradingView. Let's open up TradingView here and pull up Mattel here. So I'd like to see if there's any volume ledges accompanying that for, say, let's go back 12 months. And all right. So you take a look. We need to get through the 200. We've been rejected there before. And then take a look at the volume ledge just in front of 20. That's really, if we're going to see that story have legs for this stock, those are the upside hurdles, right? Okay, cool. All right, Mr. Walker asks, NVIDIA on a 1 hour. I love it. Love the time frames. Okay, so if I'm taking a look at NVDA on a 1 hour chart, the cool thing about NVDA is, it's a big part of why we're seeing the strength we're seeing in SMH and even to a large degree the NASDAQ and or QQQ. But as far as what I want to do, I'll tell you what, my friend, it's moved up the way it has, but the question is now what, right? What's next? My thought is not first to NVDA, although I clearly don't want to short it. If I'm going to do anything with it, I think your time frame of the 1 hour is the way to go. But I'm thinking a little bit differently, which is, how do I use NVDA? How do I think about what else is in the SMH or what else is in the QQQ? And ask myself what else could play catch up. Now, this is the same thing that we talked about at a sector level when the NASDAQ took off. XLC, Meta, Google, Microsoft, Apple all move higher, and Amazon and Tesla and the XLY just sort of spun their tires. And at some point, that rising tide does lift all boats. We've got to see a game of catch up being played. And if you take a look now, fun fact, the sector within the NASDAQ that had the most flows last week, 5-day net flows, XLY, consumer discretionary, Amazon, Tesla. So that catch-up game is what I'm thinking about. So would that be best in NVIDIA, or might we get an opportunity to take advantage of something like Texas Instrument or Intel or something above the 200 that hasn't launched into the stratosphere by 100 points like NVIDIA did? So that's the way I'm thinking about it. Now, if you're down to the 1 hour, what I'll tell you, Mr. Walker, play the 1 hour daily price movement ranges and wait till we get a setup. It looks like we're trying to set up for an oversold buy. So I'd focus on the support zone of the historical price movement range on that time frame and look for a buy. Yeah. All right. Hey there, Donald. Is it time for the hurricane trade? Yes, I've been living in Florida what seems to be pretty much my whole life at this point. And I start thinking about things like Generac, NEE, and I wish I could buy stock in Pop-Tarts, because apparently strawberry Pop-Tarts, I can't remember if it was frosted or unfrosted, details matter. Strawberry Pop-Tarts are the biggest seller during hurricane season. You don't need to heat them up. They don't need refrigeration. They don't need a can opener. Yeah, so who knew, right? So if I could go long Pop-Tarts this time of year, I would too. Generac is definitely a stock that I like to put in my what I want to own before the lights go out. Am I there yet? No. However, I think anywhere between about 100 and 92 is a fine spot to start thinking about an oversold buy in a neutral environment. I actually don't have that set up yet, Donald. And, the 1 year that I had a tremendous trade going into this time of year, living in South Florida, it's a reality. So it's kind of a joke. My husband's a lifelong Floridian. He was born and raised in the county we live in. So, the kind of joke is, what stocks do you own before the lights go out? And it's usually NEE, which is FPL, Florida Power and Light, and Generac. But the one year that Generac really, really went was sadly because of the tragedy of the fires out west. And so that kept that trade going. It really hasn't had that same rhythm really since. So, Donald, I might have to take a look at what's happened to Generac in the interim, but I love where it's sitting. I love the fact that this April, May, June, I can look at this at around $100 as opposed to last year when it was over 2. Yeah, so it's definitely getting close. And I think looking at an oversold buy in that sideways market would work pretty darn nicely. All right, next up, editor wants to take a look at Home Depot on a daily. Sure. Home Depot, really pretty choppy, ugly chart. When you see kind of this ugly chop, and that's very ugly chop, notice if it's happening above or below the 200 exponential. I like to use the 200 propulsion. That's it's a fast exponential moving average in the 8 and the slow exponential moving average in the 200. And I'm looking for a cross and an interaction with price. And ultimately, Home Depot is still in the bearish hemisphere. In fact, it struggled ever since it moved lower back in February through, and I take a look, earnings, absolutely just Charlie Brown and Lucy with the football. Take a look at what happened to Home Depot after that. It's been chopping around below the 200 period exponential ever since. So it's tough to be bullish here. But again, if we're going to see a rising tide, that's a little different. I don't think that of all the things I could look at for potential breakouts, I'm just not sure Home Depot would earn a spot on the roster quite yet. When I'm looking at my starting lineup, Editor K, I'm just not sure that something below the 200 is on it. Now, something like UNH is also quite choppy, but it's starting to make its way north of the 200. That might be worth looking at as opposed to Home Depot. So I definitely want to keep an eye on it. I just don't think it's ready quite yet. All right. Okay, next up is what are my thoughts on NET? Looking at a long call. Sure. Okay, NET near the highs. It's pulling back a little bit this morning. Not quite enough. Fresh uptrend. So I'd keep an eye on the 34 EMA wave on this one. The Dry Warriors. I like a pullback buy. 200 propulsion would be great. The 21 propulsion would be great. Again, those are fast and slow exponential moving averages. So for the green dots, the slow is the 21, and that's where the dots plot. So cool. So that's NET. I need a pullback bigger than that. I need probably something closer to likely 63. All right, next up, thoughts on crude oil after the OPEC meeting. Sure. Megawatt, the idea that the production cuts are still in place, I don't think have changed. If we take a look at the CME, by the way, just y'all have seen me track the Fed fund futures on the CME. Well, you can track the OPEC expectations here as well. And the outcome probability for that June 2 meeting was no change versus an output decrease. So were we potentially thinking about more production cuts, which is what an output decrease would be? We were looking at a hold, and that makes probably the most sense because there's already a big question mark hanging over OPEC as far as how compliant has Russia been with the production cuts. I think I mentioned this a few issues of This Week in the Markets ago, that the worst kept secret in crude oil is that Russia's not really complying with the production cuts, which is neither here nor there, but it does keep pressure on crude because compliance with the cuts are what makes it bullish. So remember, the real issue with crude is not the cuts. True uptrends do not happen because supply is curtailed. True uptrends, lasting uptrends happen because demand is increased. And that's simply what we're not seeing. We're not seeing the increase in demand and counterbalancing or even exceeding supply. It's the same problem natural gas has, by the way, as well. So if I'm looking at the 1 hour chart, you can see we've got a little bit of a move higher, and they probably reiterated their commitment to the cuts. It's an uptrend. Buy the gray zone. Right now, what we have on Monday is a historical volatility zone. Gang, this is really easy. It's really powerful, and I say this because it'll really help. When we think about institutions, and OPEC's an institution, right? When we think about size, we think about big money, as we like to call it. Um, they don't use traditional indicators, gang. I think everyone here kind of knows no one's making a move with hundreds of millions of dollars because an RSI did something or because a moving average crossed. Not happening. Us retail traders who are moving significantly less size, who are frankly trying to coattail those moves. Gang, our job is to coattail the move, just like it's a surfer's job to sort of coattail the wave, right? We are riding a wave. We are riding something far larger than ourselves. So this idea that I want to act like an institution is not really at all what I'm trying to do. I want to know where they're at. And it's not because of an indicator. It's because of volume, because of volatility. They use VWAPs, they use value at risk. And both those have nothing to do with price, really, and everything to do with volume and volatility. So what I would say, if you're thinking about coattailing institutional or whatever, take a look at where that gray zone is sitting. Megawatt, that's what I'd watch. And you can see what it did on Thursday, although that's a very risky position going into OPEC. OPEC is like the FOMC of crude oil, right? So I would be just as nervous getting long in in the dollar or the euro in front of the central bank decision as much as I would getting long or short crude oil in front of that central bank, if you will, the OPEC cartel. So I'd wait now that it's out of the way. Megawatt, yeah, that zone's going to be sitting at about 72.15 to about 70.80 in that area there. So I like the buy very much. In the 1 hour, perfect. Well done. Absolutely. Well done. All right. Next up is, bear with me here, gang. JP Morgan or Goldman? Cuba, if you are looking at a buy, JP Morgan. Yeah, if you're looking at a buy, JP Morgan. If you're looking at a short, Goldman. Yeah. So I think the first thing is to ask yourself, what is it that I want out of the trade? Am I looking to build a bullish position, or am I looking to build a bearish position, right? If I'm looking at these two stocks, what is it that I need? Short sell, long puts, or long and long calls? And then that's where, when we build watch lists, and I've been doing this for decades, we don't want to build just a singular watch list. That's actually of no good. And I don't mean having 9 different scanning results, output results. We need directional watch lists. And I don't really particularly mind whatever the criteria is, whatever speaks to us individually, right? But we need a criteria. When I build a watch list, there's a bullish watch list and there's a bearish watch list. And so that's where Goldman and JP Morgan are such a great example. Cuba, thanks for the question about that, which is JP Morgan lands on the bullish watch list. Goldman would land on the bearish. Yeah, pretty simple there. All right, next up, David G asks, gold futures. Yes, a lot of folks want to know what's happening with gold. And I'll tell you what, straight up, David, this has got to be one of the most difficult markets to trade right now, at least for me. If you're out there slaying gold, hats off to you. Right now, when I'm trying to day trade gold, it's about the worst symbol that I could possibly day trade. I have it on the do not watch list. Talk about watch list. We have a do not watch list. And right now, gold is there. On the watch list, on the 1 hour or the daily, when we lengthen the time frame, when we lengthen the time horizon. And by the way, I was talking a little bit about lengthening time frames and time horizons, sort of just for giggles. I brought it up on my Twitter feed. And I've been getting a lot of questions from people asking about part-time trading. I'm thinking, what do they mean? And then I started thinking a little bit more about that. Rog, what if I have limited hours to be trading? Can I be a part-time day trader? Can I be a part-time swing trader? And I think this notion of professional, full-time, part-time, they mean very different things in the world that is not trading. In fact, when someone says they're a professional trader, that's actually a completely different designation. I'm not a professional trader. That means something completely different to brokers and governing bodies. So be careful throwing those words out there. They mean something very different in our world of trading. Well, so does full-time and part-time. And so when people say, are you a full-time trader? No, I don't want to work 40 hours plus a week trading. In fact, I don't, right? So if we think about what's part-time, what is it, 35 hours or less? I don't think you even need 35 hours. I'll tell you what, gang, I spend a total, including this show, of about 13 hours a week on the mic. And that's where I'd say 95% of what I do occurs. 95% of my setups, 95% of my options trades, my day trades, my investments, it's going to happen in those 13 hours per week, right? My last book that I wrote, and I got to wrap up here. My last book that I wrote was Forex on 5. How can I trade 1 hour a day? And it has nothing to do with, put the trade in there and go out for a picnic. It was nothing like that. It had everything to do with how do I set up my life so that I can automate my tools, make decisions, and have my trading platform act as a trading partner. Let technology, look, if AI and robots are taking over, let's use them to make some money, right? Right now with gold, that's exactly what I would do. Lengthen the time frame, use my platform to let me know when I'm trading down in the daily price movement range zone, and then use my other indicator, the multi-trend, to tell me whether or not I can buy. Right now on the 1 hour, I cannot. I can short though, maybe around 1980, but I can't buy till we get down to about, looks like 1945, 1943. Can't do anything till there. So the time frame matters, right? And at this point, until it reaches those zones, not much I can do. All right, gang. Thanks as always for being a part of Charts and Coffee. I'll see you all tomorrow, same time, same station. Till then. All right, gang. Be good to each other.